And welcome to the webinar. Of course, today is Thursday, November 16th, 2017. Now, next week, of course, next Thursday, of course, is Thanksgiving. So I do want to wish everybody a wonderful Thanksgiving and hope you have a wonderful long holiday weekend. And as always, I do want to thank you for being a member. So thank you very much. Of course, the markets will be closed next Thursday for Thanksgiving. Anyway, guys, today what I want to do is I want to jump right into the usual instruments that we track from the long-term perspective to the shorter-term perspective. And then what I want to do at the end is go over a few stocks, kind of showing valid entries, okay, and how we can help time the entry, if you will. Anyway, let's jump right in. Here's the monthly charts. S&P 500 upper band is 2458. Okay, we were at 2578. So as you can see, we're about 120 points above the upper band. Market's just exhibiting unusual strength. The Dow, the upper band is 21,420. So we're about 2,000 points above the upper band on the Dow. For the composite, it's 6178, all right? And the other day, we closed at 6738. So again, about 600 points above the upper band. And then here's gold, long-term view of gold. Now, again, we've been in this tremendous kind of horizontal trading range for gold for the past couple of years. And again, the only thing I can say at this point is simply this. When this thing finally does break out or break down, I do believe it's going to be a fairly substantial move. All right, and then here's crude. Now, this again, to me, is very important because we are right now butting up against the mid-band. And this is interesting. As you can see up here, the mid-band is 5570. We closed the other day exactly on the mid-band. All right, and you know, I've been saying for a while now that, first of all, I expected a retest of the mid-band. Now the million-dollar question here is, do we get through the mid-band? And I'm going to show you the weekly charts a little bit later. But the key here is if we can get above that mid-band. If we can, then I believe gold could move substantially. I'm sorry, oil could move substantially. When I mean substantially, I think it ultimately would retest the upper band. So that could be a significant move. Now, likewise, if it's repelled here, you know, it could go down and test that low, which is 26. So right now we're kind of in no man's land on oil. Erase that there. And excuse me. So I think what we want to do here at this point is just basically have a little patience to see which direction oil's going to go. As I said, ultimately it could be a fairly significant move. But by the way, when you look at this monthly chart, you know, again, we've got money flow coming into oil. All right. I think ultimately if it pulls back, you know, I'm looking for a pullback probably somewhere in this area. Okay. And then it'll probably make another run higher. So again, I don't want to get premature just yet with this position, but oh yeah, Terry, hang on 1 second. Yeah, I'm gonna put the handouts. Let me see here. Yeah, sorry about that. There you go. Yeah, keep these charts obviously handy. That's, you know, the critical thing is knowing where all these levels are. Anyway, Apple 147.63. As you can see, we closed over 171 the other day. So again, Apple back to showing just highly unusual strength. Now we scale down to the shorter term view. Now this has been, to me, really fascinating with the S&P 500 because it's kind of traded like we would expect. And what do I mean by that? Well, we took out that major 25.78 level, all right? And you know, what's interesting is, by the way, the market was almost looking like it would fail and never get up to 25.78. And ultimately it did, took it out, and we've got that pattern that, I don't know, a long time ago we kind of named it the snake pattern, because what's been happening is the S&P has kind of been trading above and below that major line. All right, it got as high as the next upside confirming line, which is 25.97, and failed. And interestingly enough, yesterday it dropped right down to the downside confirming line, and that's where it held support, which is somewhat what we would expect. Okay, and of course today now the market's up fairly substantially. All right, now the question is, does it ultimately get above 25.97 for 2 days or close for 2 days above that? And if it does, and that paves the way for the next move to the upside. However, you know, this is kind of an interesting market. Now, again, I don't particularly advocate, you know, selling up here. You know, to me, the better move here is to buy the dips and continue to buy the dips. And I say that for a couple of reasons. I mean, first off, as you can see from this chart, this is the 200 EMA, and that's the 253. All right. So even with this kind of choppy pullback action we've had the last 2 weeks roughly, the trend is still up here. So you're better off trading in the direction of the trend. And then again, you're better off trading when the market gets oversold. So what do I mean by that? Well, you know, here's the Williams oversold here, here. Didn't quite get oversold here, got oversold here. And then yesterday it got oversold again. So, I mean, that's what I advocate. I don't advocate trying to catch these tops. You know, I know a lot of people do that. But ultimately, to me, that's kind of a loser's proposition. But now here's the 30-minute chart. 30-minute, there's the major 25.78 line. Again, we've been trading over and above it. And if you scale down to this chart, you can see here where it got slightly oversold there, oversold here, here. And then guess what? The gap down against you was oversold again. And, you know, say you bought up in here, you know, obviously you've had a move against you, but today, had you held, you were well rewarded because now the market's above that. We might be challenging the 25.87 line. But here's the VIX, 60-minute chart of the VIX. You know, and quite honestly, the VIX really extended further than I expected. I expected resistance at 1250, actually took out 1250, ran to really above the 1406 line, and now it pulled back to close below that yesterday. But the point here is this: the VIX did get above the upper band. All right, we got above it here, which tells us to expect another move up. Okay, which tells us the market should drop. Got above it here. And then yesterday we had the big spike above the upper band. So I do expect another rally in the VIX. And then here's the 30-minute chart. Again, you can see where yesterday it was well above the upper band. And the 30s crossed into an uptrend. So, you know, to me, I think we get a little bit of price, what do I call it, choppy price action before the market resumes and attempts to make a run at the next upside level. Okay, now here's the Qs. All right, there's the Qs. Major line was 153.13. As you know, we took out that level. Support line on the downside is 150. You can see the strength here, by the way. Again, the Qs are starting to separate. So, we know that this is strong. Chaikin money flow has been positive. It's been positive for a while. The upside line is 153.91, downside 152.35. Even with the pullback yesterday, the Qs never closed under the 152.35. Here's the 30-minute chart. Again, major line 153.13. Okay, here's where it crossed up. We had the gap up, crossed up, oversold here, oversold here. Got oversold yesterday slightly. So again, momentum is still to the upside. TLT crossed into an uptrend back on the 6th. Okay, major level is 125. We took that out, ran up to almost 127 here and pulled back. 123.45 is the next major level down. And of course, now the TLT has basically bounced and recovered that 125 line. 128 to me should be the objective. And then here's the 30-minute. You see the 30-minute crossed up. And then here's the oversold condition back in here. So again, if we look at these two charts, we've got the 60 uptrend, 30 uptrend. So we have the two short-term charts trending to the upside. So again, to me, you're better off buying the dip as opposed to selling the rally. And then here's GDX. GDX is in a downtrend on the 60. It's struggling right at the 2265 line, which ironically, it closed yesterday right on the line. Now, here, my feeling here now with the GDX is this. If it drops below this level, then I think we could have a pretty big move to the downside. But again, we're still trading above that line. But 2188 is a major level. And then here's the 30-minute view. Now, this is kind of interesting because if we look over here, the 200 is 2274. The mid-band is exactly 2274. So it's kind of interesting. Today is kind of a make or break day for the GDX. All right. I think if this crosses to the upside, then momentum should be shifting. If it stays below it, the 200, then I think we make a run down to that 2188 line. And then here's Apple. Okay. All right. Virtually sitting right on that 168.75 line. Now, I know Apple bounced up along with the market today, so kind of a low-risk entry point at that support level. 175 was the objective, which it took out. And I think at this point, it's probably going to make another run back up to the highs. Now, here's the XLE. Now, again, we were talking before about how the oil itself, the commodity, was basically right at the mid-band on a monthly chart. We scale down to a weekly chart, and last month, it came right back to the mid-band. Mid-band is 70.81, okay? That pivot high was 70.45, and now you can see we're selling off this week. So again, these levels become just tremendous support and resistance levels, all right? And, again, right now, because the weekly's in a downtrend, all right, is a strong possibility it's going to move back down and drop even further, maybe retest that 61. And then here's the actual commodity on the weekly chart. And what's kind of interesting about this is the 200 EMA is 57.59. Last month it hit 57.92. So it took it out slightly, and now it's reversing. And remember, I always feel that 200, as well as the mid-band, are probably the strongest lines of support or resistance because they are longer term because they are longer term moving averages. All right. And that's why when you see a 200 EMA cross above that 253, to me, that's a very significant event because they are long-term averages. And usually you don't get whipsawed like if you were using shorter moving averages. All right. Any questions? And then I'll go into the topic I really wanted to cover today. But again, you have the handouts. This way you can look at the price levels in the charts. And again, what makes this all very relevant too, by the way, is, for example, oil, we would tend to stay out of it at this point, wait for it to actually confirm a bottom, right? And I think, if we do get a bottom here, bottoming action, I think there's going to be some really nice opportunities in some oil stocks. It's similar to the way I look at the TLT and try to time some of the interest rates and the movement on the interest rates, because you can use those to effectively time some entries with some high yielding stocks. All right, now I want to talk about timing the entry, okay? One of the things that I've been looking at is this, just simply using this black ADX line that's here. And generally, when that ADX line exceeds 40, it generally means that there's exhaustion in the move. Okay, now you can see down here that Buffalo Wild Wings had exceeded the 40 level. Like this is probably the 40 level there. But the key is, let me erase this. Okay. The key is, what you want to do is kind of see this ADX line peak. This isn't a perfect view, okay, because it's kind of a long-term setup here. But what you want to do is start to see that ADX line peak out, head down. And clearly that happened at the beginning of September, which also, it happened to be trading right at the lower band, okay. At that point, Buffalo Wild Wings bottomed out and started to move back up. Now, you see over here, this MACD, it flipped to positive. Actually flipped positive in here on this move up, slightly negative, then flipped positive again, okay? And then, proceeded to move up, and then ultimately the other day had that big gap up based on a tender offer, right? Now, just so you know, I'm always looking for an objective here when this particular setup comes to basically move back to the mid-band. And it happened, the tender offer actually exceeded that. So had you been long here, this was kind of a gift, if you will. Because look, it was up $28 or 24%, excuse me. But the point is this, okay? The progression with the bottom formation is this. This ADX line is heading up, it starts to peak out, then starts to head down. Of course, we have Williams oversold here. You had a low risk entry right here at the lower band. And again, by the way, it's limping along the lower band here. Now, you might be thinking, well, okay, it's oversold. Well, we know it's oversold because it's at the lower band. Okay, by definition of these extreme band settings, we know that if price is kind of trading under the lower band, by definition, it's oversold. And same thing if it's limping along the lower band, just like Buffalo Wild Wings did. But the issue here is this. Maybe you thought about entering here. Well, you go down here, you can still see that it's not very crystal clear, but the ADX line is still heading up. We still had a bearish trend. And we know that because this red DI line, minus D1 line, is above the positive D1 line. So in the formation of a bottom, okay, step one is ADX line peaks out, starts to head down. Step two is we see positive money, MACD histogram. It flips positive. So it actually did that right here, probably right in here. The third facet is the plus D1 will cross over. Now it crossed here, albeit it crossed back down, crossed up again, and pretty much has remained positive since that gap. And that's generally the stage of the bottom. As I said, typically, if I see a stock trading around the lower band, to me, the objective is usually back to the mid band. And it just happened that Buffalo Wild Wings exceeded it. Now, we scale down to a 60-minute chart, and I want to point this out. Now, we know that since probably around the middle of October, MACD was positive. The ADX or the D1 had actually turned positive too. So now what you want to do is go scale down to a 10-minute chart, a 60-minute chart. And just take any overbought conditions, oversold conditions, as long as the trend is up. And as you can see here, not very definitive here, but the 200 is above the 253. And lo and behold, look at this. It was oversold before that first gap. Got oversold again back here on the second. And then, good things happen when these setups occur. And it just happened, of course, they received that tender offer and the stock shot up. But from the 16th, roughly back here, predominantly the MACD was positive on the daily and the plus D1 was positive. Okay, so just simply scaling down to a lower time frame chart, buying the oversold condition makes a lot of sense. I hope everybody sees that. Okay, now, here's a stock that I've been looking at. I'm waiting for an entry here on this. It's Celgene. Okay, now you can see here on Celgene, it was almost at the upper band here. Sold off, broke, had this first gap, then a gap down again. And now it's kind of limping along the bottom band. All right, now, again, down here, we can see the ADX line is heading up. All right, now it looks like it's, and by the way, the reading is 58. So when you have a reading on that ADX line above, I'm going to say above 50, it's generally indicative of major exhaustion. And now the question is, okay, when do you enter this? All right, well, at this point, patience is a virtue. Okay, because now what I want to do is I want to see this start to curl down. Okay, we already have had the MACD flip to positive. Okay, but I want to see a little more confirmation on that ADX line. And then if we scale down to a 60-minute chart, okay, we can see a couple of things happening here. Obviously, we see the major down gap well below the lower band. And by the way, if you look at this formation, it's essentially equivalent to what I was explaining on the daily chart. Here's where it peaked and started to head down. So now what you could do is, maybe nibble in here when the MACD flipped positive. And if you look at that little snapback, I don't know, it's probably a 4-6 point snapback. And it happened really quickly. But obviously it's kind of flatlined here. Okay, now it's oversold again. ADX line's heading up. So to time this, what you want to do is just wait and see this start to turn down. And preferably this MACD turns positive. But you can see how this kind of keeps you out of trouble from entering a little too prematurely. But again, this is a different situation over here. This is the what I would call the kind of the snapback from the oversold condition. But interestingly enough, and compare this down gap to this down gap. And I'm going to point out a little nuance here that makes it vividly clear where this second down gap might be worth trading. And it's very simply this. When you look at this price bar up here on this down gap, a subsequent price bar never closed above that high. In fact, here was a close below the low, all right, which indicates that most likely it's going to continue down. If you compare it to this down gap, look at that second bar. The second bar closed above the high. So that's how you can kind of tell if the gap that, that kind of sell off under the lower band makes sense to try to nibble on, and combine these factors. Because, really, if you think about it, say you entered in here, well, most likely your stop would be under the pivot low. So it's a pretty negligible risk, all right, very small risk factor. And again, if we look at that, it's probably, say, 96. So it's about a $6 move up to that lower band. And quite honestly, if I was long here, I would have pulled off right when it hit the lower band. Because, you really don't know if it's going to get through it or not, all right? But still, a $6 move in 2 days is not a bad trade, especially if you're using weekly options. And by the way, with a trade like this, you could use the front week because you're expecting that move to happen within a day or two. Now, here's another stock. This is one I've been looking at too. Now, glowingly, you can see that it's in a downtrend. Okay. And we know that because back here, it crossed into that downtrend. And, it's been running in that beautiful downtrending formation, 253 up here, 200 EMA here, both moving slightly lower, and 200 is underneath the 253. Now, the question here is this. We're approaching the lower band, okay? Yesterday, we had a doji bar. Actually, this was on Monday. We had a nice doji bar, all right? This line is still heading up. We've got bearish trend as defined by the ADX. So now you want to watch it and say, okay, let's see if it starts to reverse. And let's see if, this line starts to head down. The D1 and D minus D1 start coming together. And then we scale down even further. Excuse me, let me erase this. And we look at the 60-minute. Now look at the 60 here. 60's in a downtrend too. Okay. But now, interestingly enough, we have the 60 has already peaked out. It's almost 50 and it's starting to head down. Right. So at this point, to me, KMI looks like it's on an alert list, and you're waiting to see if this thing is going to actually reverse and set up a buy signal. And by the way, I kind of like KMI because it does have weekly options. And it's a fairly decent high yielding stock. But that's what I wanted to cover today. I mean, this whole concept of integrating that ADX line can be very powerful. All right, let me see here. Any questions? And by the way, this is one, so I'm looking at this guy here now. Oh, let me close this out. Let's take a look at Celgene now. All right, now look at this. It's up $3 today. Okay, so now it's flattened out. Let's take a look at the 60. Okay, and the 60 now, yeah, I mean, really on the 14th, we had that entry right in there when the Williams cross just turned positive. Now, if you're long this stock, where would your price objective be? That's the $1,000,000 question. All right. Well, I'll tell you this. Number one, we're looking at about a half gap fill as objective one. Objective two would be the full gap fill back up in here. All right. Objective three would be the mid band. So this is kind of an interesting setup because it's actually setting up as we talk. And there's another one that I was looking at, Gallade. It's kind of the same situation. All right, here we go. Gallade. Now look at this, heading up. Let's see if that has flipped over on the 60. All right, so we had right in here, see how it peaked out, started heading down. Money flow MACD turned positive. This is an interesting setup because there's no gap here. And the price had exceeded the upper band. So we generally know that there's going to be a retest. Okay. So this is a deal that is pretty intriguing at the moment. But anyway, that's that's what I wanted to cover today. Let me see here. Any questions? Okay. Well, good. I'm hoping that this has been helpful, and I'm hoping it's been informative. What I'm trying to do is to figure out a way how maybe, and I don't know, maybe I do it on a weekly basis because, what I want to be able to do is say, okay, here are the stocks that are in the process of bottoming, all right, and then, give everybody a list. And I'm thinking maybe on the weekly basis because, there's a number of stocks, obviously this same setup applies on a weekly chart, except that when they bottom, it's usually a more pronounced move. You tend to get a lot of stocks setting up on the daily time frame. But what I find interesting about this is that, then guys can go ahead and use this stuff. Like, for example, I mentioned Unit. Here was a stock that, here's the pattern. Okay, look at that. Came up, peaked, headed down. Underneath the lower band. So I had told you I went in there, I bought right here, in here. Let me erase this. And what was interesting about this stock was that even though it's a fairly decent yielding stock, the option premium was just tremendous. I had sold the November calls. I think I paid $15.20, and I sold the November 15 for $1.40. Okay, which means I'm going to basically lose 20 cents when they're assigned, which of course is tomorrow is the expiration date. But I'll net $1.20 per share, which is kind of nice. Now, I noticed that they're paying a dividend in the beginning of January. So what I did was I came back in and I bought more, and I sold the January 17.50. So I'm obligated to deliver the stock up in here. You can see the stock's now 15.86. And I bought it yesterday when I saw this price action. So anyway, this is how this stuff can kind of help you too. And, and me personally, I like grabbing the call premium, especially when these stocks are in a position of bottoming like this. To me, it's still trending down. Okay. But because of this action, look at that, the ADX line was probably 60. To me, that was signifying exhaustion. And the downside risk wasn't that significant. So anyway, that's what I wanted to cover today. So look, I'm hoping that this has been helpful. And, as I said, next week, of course, is Thanksgiving here in the States. So markets will be closed, and then we'll convene again the following week. So again, I want to thank you for being here, and I'm hopeful that this has been helpful. Thank you very much.